Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Kian Soon, CEO of Astral Asset Management, coming out of Singapore. Kian Soon, as always, thank you very much for coming on the show.
Good afternoon. It's a pleasure to join the show again.
Now, Kian Soon, before we get your insights, let's take a look at how cryptocurrency markets are performing, and then we'll move on to regional markets. Now, Bitcoin is at 44,337. It's up 2.28%. Ethereum is at 3,007. It's up 2.83%. Now, looking across to regional markets, we'll start close to home with the SGX. It's at 3,261.87. It's down 0.51%. Across the region, we've got the KLSE, which is at 1,593.3. It's down 0.16%. Shanghai is at 3,471.87. It's down 0.49%. The ASX All Ordinaries is at 7,401.1. It's up 0.21%. The Nikkei is at 26,410.5. It's up 1.62%. The Hang Seng is at 22,534. It's down 1%. And rounding up the numbers, we've got the Kospi, which is at 2,712.62. It's up 0.53%. Kian Soon, what's your view on the mixed performance of markets this morning?
I reckon the markets globally will still be under the influence of what is happening in Ukraine as the Russian has commenced military operations. A lot of focus on what is going to how is it going to be evolved, as well as the markets always at such circumstances take directions from the U.S. markets, how the U.S. markets have performed last evening, and what we saw this morning is just a follow-up.
Now, Kian Soon, looking at our part of the world, what are the impacts on sanctions that are basically tightening the noose around Russia and its companies and entrepreneurs?
I think if you look at, in terms of sanctions, basically it is to, sort of punish the Russian business, but the implications and the impact on our side is going to be higher energy prices. Mainly because a lot of the Southeast Asian economies, even in Singapore, we are dependent on the Russian natural gas as well as fuel. So one of the implications for, I could think of immediately is rising prices of energy. This already has happened before this military conflicts commenced. And this is just like pouring oil onto, a flame, right? And it's going to, and that's why we are seeing that oil prices are trading above $100 per barrel.
Correct. In fact, I think Brent briefly climbed above $111 per barrel earlier today. I think it's highest in more than 7 years. Now, one of the key things that's obviously going to have an impact on globally is inflation. How do you think that that's tempering expectations in markets around the Fed and the aggressive rate hikes that were originally a shoe-in last month but are no longer so certain anymore?
Yes, I think Fed and other central banks have a more challenging task ahead given the situation, because previously their only focus would be to decide on the frequency as well as the quantum of interest rate hikes in the coming year, basically to look after inflation as a core issue. But given the situation where there is military conflicts and there's a worry that economy will slow down in key developed markets, I think the central banks will need to balance between the two. Mainly because if they rise interest rate too fast, they might slow down and move the economy to a halt, and that will cause stagflation, which is a much more tricky issue to handle. So central banks will have a challenging task ahead, but the good news is they have options. They have the tools to basically decide when and how many basis points they're going to increase. I suspect what is going to happen in March is you're going to have a 25 basis point increase, and we will look and see how the situation evolves. Because geopolitical tensions, could just vanish very quickly if there's resolutions, and that will leave the central banks more room. And if this conflict continues to be more, more widespread or it's going to take a much longer time to resolve, I think the central banks will have to be, walking on tighter ropes for the coming year.
Okay, now Kian Soon, and with your investors hat, where do you see opportunities or where are you deploying your capital?
So the what I've been sharing with investors on the investment opportunities is literally I could see that this could be the year where there's a major correction for all the US global equities as well as its indices. The thesis is simple. They have a good run for the 4-5 years with double-digit gains. The stocks, they are overvalued, and with the rising interest rate and with the current geopolitical tensions as well as a potential slowdown economy, I could see that the opportunities could be looking at Asians equities as money and funds will look at the stocks here simply because the stocks in Asia are valued at a lower price and they provide a higher margin to safety. At the same time, they are less hit by the geopolitical tensions simply because if you look at South Asia economies, they are pretty self-contained and you could actually find good investment opportunities as such in this part of the world.
So in this part of the world, which are the markets that you see that are most interesting and probably of good value?
In terms of value investing and finding good stocks, we are looking very actively at the Hong Kong markets because they generally they have been very beaten down in the last few years as a result of multiple factors. And these companies are usually operating in China, or they have businesses that are still growing at double digits. But at the same time, they have valuations which is very attractive. So we like margins of safety. We like businesses that could cope with rising prices and have the capabilities to pass on these prices to their customers. I think that's very important under this environment. We also like businesses that have good balance sheet because a lot of business will be hit by the rising prices. And I think one of the immediate reaction is they will not even spend or expand into new geographies or expand their business in any way because of the rising prices, rising costs as a result of energy, as a result of interest rates. So only companies that have strong balance sheet could continue to expand or grow in a sensible way. And at the same time, they could actually be opportunistic enough to acquire smaller and weaker competitors. We are seeing that a lot in Asia. And I think this is a period where you could actually, if you could identify them, this could be the winners for the longer term.
Now, Kian Soon, thank you very much for your insights and thank you very much for coming on the show.
You're most welcome.
Now, we've been speaking to Lee Kian Soon, CEO of Astral Asset Management out of Singapore on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out this video and podcast on our website, www.biztech.asia, as well as our various social media platforms. Please like and subscribe to these various platforms. Thanks again for tuning in.